For this session, we're focused on the two vital areas of sustainability and philanthropy with the innovative bank and wealth and asset management company, Lombard Odier. Please send us your questions. Please, we're going to be joined on screen by Duncan MacIntyre, Chief Exec of Lombard Odier, Florence Kiss, SVP of its Sustainable Investment Offering, and Maximilian Martin, Global Head of Philanthropy. We'll hand over and come back in about 15-20 minutes' time for some questions. To you, Duncan, I think. Thank you.
Greg, thank you very much indeed. Very good to be here. Thank you very much for having us for the second year in a row. As a guy that was brought up in Wales, I'm delighted to be supporting anything in the West Country. So this is great. So this morning you had a session from Burgess Salmon on discussing business exit. So we'll come back to that in a second. So just by way of introduction, I, as Greg said, am CEO of Lombard Odier's UK businesses, and that means our businesses in London, Geneva, Zurich, the Crown Dependencies, and the overseas territories. So you have the joy of me joining you from one of those in Bermuda today, and I'm in Bermuda with my colleague Stuart Wright, who is normally based in Geneva, and many of you will know Stuart. For those that don't know Lombard Odier is a private bank. We have no shareholders. We're entirely owned by our managing partners. We're managing around 380 billion of private client assets today, so one of the largest private banks in Europe, and also we have the honor of being the highest capitalized bank in Europe. We have an absolute commitment to sustainable investing, and I think that is extraordinarily important. We'll hear more about that as we go through. And so what we thought we'd do is, and I thought I should also mention, we're also B Corp'd. Now, many of you might be talking about B Corp for your own organization. So if you want any help about that, please don't hesitate to reach out, as we, I think, were the first bank in the world of our size to be B Corp. So it's something we're very proud of. So let's go back to your session at 11 o'clock this morning when you talked about business exits with Burgess Salmon. We'd like to follow up on that and talk about the options available to UK entrepreneurs. Last year, I mentioned to you that we conducted a survey of around 250 UK entrepreneurs with at least 3 million that they had in liquid assets. So we asked them about this, and we found that the business owners are increasingly looking to express their values either by making a donation or by investing sustainably. 47% of our respondents would engage or have engaged in philanthropic activities following the sale of an asset. Almost 3/4 say investors have to play a role in tackling global warming. A similar proportion are willing to consider sustainable factors in future investments. So today, I'm delighted that we're being joined by Florence Kiss, who is a portfolio manager and our sustainability expert. Good afternoon, Florence.
Hi, Duncan. Very nice to be here with you.
Great. Florence is joining us from Geneva, and we're also in Geneva delighted to be joined by Dr. Maximilian Martin, our Global Head of Philanthropy, who helps many of our entrepreneurs with their philanthropic giving journey. Good afternoon, Max.
Good afternoon. Pleasure to join you virtually.
Great, good. Well, we're really testing technology in multiple time zones today. So, Anita, I thought what we'd do to make it easier is frame this around a case study, and then I would take the liberty of interviewing Florence and Max on your behalf. So this is a real case study, slightly amended for the sake of confidentiality. So Anita is a 50-year-old. She lives in Bristol with her husband. She's just sold a fintech machine learning business via a private sale. She started the business 10 years ago and built it from the ground up, reinvesting the profits to grow the business. She loves her work and the challenges of building new business. She has no intention of retiring. She is involved in other ventures and she will continue to build, but she has worked hard and can afford to bank most of the net proceeds of the sale. So of the amount that she keeps, she's going to use 20% of it to buy her dream property in France and create an estate plan that looks after her family, and in particular, her 2 daughters, aged 18 and 22, and provide for her own retirement. 10% of the sale, she's earmarked entirely for philanthropic activities, and she wants to do more than just write a check. Her father died, sadly, of cancer, and she's passionate about funding research. She would also like to give to charities concerned with vulnerable women and protecting the environment. She wants an advisor that she can trust to help her maximize the impact of her donation. With the remaining 70%, she's going to use this to add to her existing portfolio, which is a long-term balanced allocation to global equities and bonds with some private equity. Now, thanks to the influence of her children, she is very concerned about environmental issues and is keen to allocate to green investments. However, she feels unsure about what the different terminology means and has some real concern about greenwashing. Ultimately, she's looking for an asset manager with a dedicated sustainable investment focus that she can rely on to help her express her own values. So, Florence, I think this is a perfect time for me to bring you in, if I may. So, look, sustainability, ESG, impact, low carbon, natural capital, all of these terms that we all hear all the investment firms are using. How do we actually define sustainability, and how can we deal with Anita's fears about greenwashing? Florence.
Yeah, so Duncan, you are pinpointing really the main issue of sustainability these days. There is no standard definition of sustainability. So what I'm going to give you is our vision as Lombard Odier, because I'm not going to talk about the broad market yet, even if Europe is really trying to put some orders in that and give a broader and standardized definition of sustainability, but we're not there yet today. So our own definition goes beyond ESG, which stands for environmental, social, and governance, which are ex-financial data. We've been doing it for 20 years and we've seen the limitations and the fact that it doesn't give all the information that we need. You can see on the screen, for example, two companies. The oil and gas producer has a very good ESG score, while the electric vehicle producer has a very average ESG score. So it doesn't give you, well, even if it gives you good information about the business practices of those two companies, it doesn't give any information about the impact of the product and services, which is something that is really important. We're facing future challenges. We're facing a need to transition from a dirty economy towards a cleaner and more circular economy. We need to understand how those companies are positioned to transition their business model. For example, if we were investing in just according to ESG, we would buy the oil and gas producer and not the electric vehicle producer, which we agree is not really common sense at the moment. Even if, you know, the oil prices have been skyrocketed, we know that in 10 years' time, it's probably looking very different. So we need to take forward-looking assessment of those companies and reinvent, rethink the way we look at investment. Talking about greenwashing, it's a very interesting subject. I know there's a lot of noise about that currently in the news. How do you prevent? Well, I think it's to be transparent and to be humble. We're just at the start of the journey. We're trying to make assumption of what the future will gonna be. You know, you need to be very honest with your customer and provide them with the data that you have for now that are really imperfect. And you know, we tell them as we really believe that it's going to improve throughout the years, and probably some companies' profile will change with new data, but it's imperfect doesn't mean that we don't need to do it. I think we need to start because we need to orientate the flows.
Interesting, Florence. So, I mean, it sounds like work in progress, but that slide's particularly interesting, seeing you would obviously expect the electric company to have naturally a higher ESG score than an oil company. So it does show that we need to see beyond that. So you know Anita, you know how passionate she is about her commitment to the environment. So how can she actually make a difference, and what can we do, a company like Lombard Odier, to help her do that?
Well, there's more and more things that we do. First of all, we really need to understand her needs and what she wishes. So Anita is talking about value. So this is where we can introduce ESG and controversies, and maybe if she wants to do some exclusions according to what she thinks is sustainable or not. And also we need to develop solutions for green investment. That can be in different areas. So she's got a portfolio of liquid equities. We can find some solution providers there, some transitioners, and we do have a strong team that is supporting that efforts and developing tools to allow us to evaluate the green side of the strategy of those companies. But if she wants to really have an impact, as she can do private assets, we believe this is really a good way as well to allocate your portfolio, as you have direct investments into solutions like green infrastructure, for example, that could be adding impact and performance. So there's a lot we can do. We can offer Anita still a diversified portfolio, multi-asset, multi-product that is reflecting her values, her convictions, while we do very thorough asset allocation and provide returns.
Interesting. And it's interesting to see that private assets is coming into the agenda so strongly now as we start looking at the whole sustainability journey. Look, this is a tough last question, but I think it's one that probably out there people are asking. So many people think that investing sustainably means sacrificing performance. So is that true? I mean, are people being asked to give up performance to invest in a more sustainable way?
Well, some could tell you that since the beginning of the year, it's obvious because we've seen that, all the dirty sectors have really overperformed. But we're convinced that this is not going to last. And in fact, if you take a little bit of perspective since the financial crisis, for example, I was looking before coming on a European index on oil and gas. Since the subprime crisis till today, so including the big rise since the beginning of the year, if you had invested in the stock 600 oil and gas Euro index, you would have done -2% on your portfolio. If you had invested in the European Renewable Energy Index during the same period, you would be up 60%. So I think numbers talks more. And we strongly believe that this is going to be even more in the future. I think that there will be some stronger focus on companies that are able to transition. We know that consumers are asking for more sustainable companies. So companies that are leading the transition towards new plant-based food, for example, will probably gain market share, will be probably more cost effective, avoiding strong regulation threshold and maybe taxes, as we think there will be taxes on carbon. They will also benefit of strong investments from Europe. You've seen maybe the Fit for 55 plan that, for building renovation, it's very big. For infrastructure, same with the US that has very strong infrastructure plans. So we think this will be really beneficial factors for those companies that are able to provide solution in the three big areas important for the transition, which is electrification, which is a nature-related system, which is called AFOLU, talking about forestry.
Catchy title.
Exactly.
And let's just remind us, what does AFOLU stand for?
It's agriculture, forest, and land use. And you also have a third pillar around the transformation of material and concerning more industry, plus obviously carbon, which is going to be a huge subject in the future. So you see, there's a lot of transformation going on. I know that if you look at short term, you probably thought that you should have been invested in oil, and you would be right. But for Anita, she's got a long-term view. I think she's got time to invest into companies that are really well positioned and that will invest in innovation and have time to scale them. And this is what we really favor in sustainability and impact investments.
Florence, thank you very much. And I think that, clearly riding that transformation wave is what we're discussing here. And clearly, I think the answer, if I can paraphrase, is no, you're not giving up performance to invest sustainably. And I think that that would be not right of us if we're given the custodial rights to look after somebody's hard-earned wealth like Anita. Max, I'm going to turn on to you, if I may. Obviously, Anita's been quite clear that she wants to give 10% of the sale proceeds of her business to philanthropic causes. So how can we actually help Anita create this aspiration into action, I suppose? How do we help her on that journey?
Well, thanks, Duncan. Well, first of all, I'd like to applaud Anita because it's fantastic to give back also when you're economically successful. And in fact, interestingly enough, this is really a trend. When you look at data from WealthX, for example, right after the business, people's business, philanthropy consistently ranks as number 2 as an interest among high net worth individuals, even before education, even before sports. So, you know, if you harbor philanthropic objectives, you're not alone. That's the good news. Yeah. And what I'll do is, if you agree, Duncan, try to sort of do a bit of a speed advisory session here, obviously with all the caveats of speed, but I think entrepreneurs like speed, so we'll just try to sort of to get right at it. And first of all, you know, if you think about it, you know, given what we know about Anita at the outset, we know that, well, she isn't alone, right? She has the 2 daughters, she has the husband. She has stated philanthropic interests. What we would do at the outset is really validate those interests and try to understand if we can narrow them down. I mean, cancer, for example, you know, the good news is we live a veritable revolution in cancer treatment and diagnostics. The bad news is the incidence of cancer is really going up. I mean, you know, we had 3 million cases last year, new ones. We expected to move up to more than 30 million by 2040. So that's pretty depressing. Out of experience, you know, we try to understand, does the donor already have some kind of inkling, a relationship with an institution, interest in an institution? We're in the fortunate position to also help other donors in the space of cancer. In fact, even so much so that we've published a donor's guide to cancer, which may be of interest for those who want to explore this further.
Max, sorry to interrupt you. Is that available online if people want to?
That is available online.
Great.
Absolutely. It's available online and in English as well as in some other languages. And we also have, you know, thanks to the generosity of other donors, relationships, for example, with the Cambridge Cancer Research Center and others. So we will try to understand, first of all, what does cancer really mean for Anita? How does she want to get involved? We will try to do the same with the environment. Here again, you know, it's a vast subject. We published actually last year a donor's guide to the environment together with WWF, which is really, I think, probably one of the leading organizations in that space. We look at a number of case studies, how you can actually engage in effective philanthropy, protecting the oceans, protecting fresh water, protecting forests. And here again, we would try to understand what does she really want to do? And of course, given the amounts available, and you mentioned at the outset, she wants to be involved. Does involved mean, for example, visiting projects? Does it mean volunteering? Maybe not, because she's busy. So these 2 topics are really very well established. There's a wealth of things one could be doing, and I think a lot of experience in identifying those. When we say vulnerable women, I have to say vulnerable populations is not a defined term. So we would first try to work out, what does vulnerable women mean for her? I mean, who is this population? I mean, other than them being women, where are they geographically? Where does she want to intervene upstream? You know, preventing conditions that lead to vulnerability, helping women concretely. Does she want to do this in Bristol, for example? She's from Bristol, elsewhere. So our first step is always, that was a fairly analytical step to try to understand, what is it that you really want to achieve with your philanthropy? It's a privilege to allocate funds to social change. And how can we narrow down the subject so we can actually really add value? And this really means we need to ask quite a few questions. And the questions will be, well, here we know already she wants to be involved, but what does that really mean? We need to understand, is this a purely individual thing, or will the daughters or the husband be involved now in the future? You know, increasingly we see families where someone takes the lead, to then say, well, but in a couple of years, when my kids are through university on their jobs, I'd like to have created a structure where they can get involved as well. This is why today I'd like to allow them to already include causes that we'll be active in, because we all know, we all, I guess, have kids and were kids at some point. We know that, just because our parents do something, we don't want to do the same necessarily. So we want to factor that in. Do we want to be visible or discreet, be completely behind closed doors? Is this really more for local, international approach? Are we really at causes upstream? Are we helping populations? Are we portfolio thinkers? Are we in it for the long haul? Do we want to try out a couple of different things? So these are the questions we will seek to clarify at the outset. And we typically do this through initial exploratory conversations where we understand the motivations, the issues, the impact that Anita wants to achieve and how she wants to achieve it. And, this normally leads to a couple of initial conversations and then very different routes. We have donors with whom we visit organizations, for example. We have donors who are very analytical, who want to do workshops, for example, understand scientifically, if I allocated £1 million to X, what creates the most impact? So we really are advisors. We seek to understand how can we help you as, or in this case, Anita, as a prospective philanthropist, create the greatest impact in ways that are aligned with her objectives.
It's interesting, Max. I'm interested because it's a big sort of understanding phase that happens at the beginning on both sides and exploring actually probably where the edges of that philanthropic framework is. So look, if you've gone through that exercise with Anita and you're clear on her aspirations, I suppose the question now is, how does she actually give the money away?
This brings me to step two, which is really normally the outcome of these different conversations or maybe even workshops. So, for some individuals, going to individual charities, writing a check is completely fine, sufficient. On the other end of the spectrum, with others who say, look, I've done an IPO, I have a very large amount of money available. I'd like to be very ambitious and create an independent charity. I'll endow it, I'll pay for a secretariat. I don't mind that it has to register with the Charity Commission, so I'll deal with all the bureaucracy. But what we see more often is that especially prospective philanthropists, new philanthropists, say, look, I'd like to start to get involved in planned giving. I want some kind of structure, but as an entrepreneur, I want to be fairly flexible at the outset. So I want to really be able to make donations to multiple organizations. I want to do that in ways where I can focus on the organization and the impact, not on the reporting. I'm happy to delegate that to us at Lombard Odier, for example. And here our solution typically is, the entry-level solution is a donor-advised fund, where we essentially say, look, at the end of the day, this is a very easy way to get started. You can choose to be anonymous or not. You can give it any name you want. You even get, gift aid. So from a fiscal point of view, it is interesting as well. And it gives you all the options later, because you can start making donations to a donor-advised fund for a couple of years. And if you then say, look, I want to take it to the next level, I'm ready for the secretariat, for the foundation or the big trust, you can still do that at a later stage. So this is typically, I would say, for many people in this situation, a logical entry point. But what we anyway do is, it's really a fairly, I would say, structured approach. We go through the decision tree, look at the pros and cons of these approaches, and then seek to define what is the right structure for Anita, how does she get started, and how will the pilot year look like? So when does she want to start? How many grants at the outset, to which organizations? We would then do due diligence on these organizations and execute essentially everything, contracting the donations, measuring the impact, reporting. But always in ways that are fully aligned with her intentions, identified at the outset.
Max, thank you. I'm trying to put words in your mouth now, but I think it sounds like you're advising the donor advised fund would be the correct structure for Anita at this stage.
I think based on what we know of Anita today, I would say yes. Obviously, we're in a speed advisory session, so maybe Anita will tell us in round one, in reality, the 10% is quite a lot, and I really have always wanted to have a big charity and I want to set it up. Then it's going to be different. But otherwise, again, out of experience, I would say there are multiple advantages really that would compel me to say that. And we've listed some of them here. It's very flexible. You can make it long term. You can spend it down. You can use it as an incubation vehicle or even a companion vehicle next to the foundation we'll be establishing. This is not the case for Anita, but in some cases there are already existing charities that actually don't have really enough resources to operate really independently. So it's better to fold them into a donor advised fund. If you use a donor advised fund, you're by definition on a platform, because there is a foundation, for example, in Switzerland, Fondation Philanthropia, or in the UK, we look for UK fiscal efficiency, one of our partner organizations such as PRISM or Charities Aid Foundation. You are part of a club, a network of other donors that you can access. You can learn from others if you wish to do that. So it gives you a lot of options at the beginning, and especially, and that's why this is pillar one essentially on this slide. In a world where compliance is increasingly cumbersome, I think everyone in the audience knows this. I mean, you're entrepreneurs, you're building successful businesses, you're exiting them. You want to focus on the substance of what you want to achieve, on your products and services. In philanthropy, it's a bit the same. You want to focus on the content. And here, the donor advised fund gives you the opportunity in a really efficient way to hand off all the, say, more cumbersome aspects to focus on the social impact you want to create and how you want to stay and get involved.
Max, that's very clear. Just one question. We haven't mentioned any numbers here, but what would be a kind of ballpark number for actually establishing your own fully fledged charity? Because there's a cost to it, isn't there?
I mean, for the fully fledged independent charity, I cannot advise it really sort of in good faith for, say, under £750,000 or so, because the reality is, you have to report directly to the charity commission. You have a completely different level of auditing costs and so on, which you won't mutualize. And the presumption is that you do not just want to pay, auditing companies and lawyers, but you actually want to use the funds to create a social impact. So no, I mean, anything below that, I would certainly recommend the donor advised fund. And again, in some cases, when, for example, when you sell a business and have a cash out, you may be earning out funds over time. So maybe you're just in a model where you're starting to build experience in philanthropy. You start with a smaller flexible vehicle, and at a later point, when the big cash out comes, in a trade sale, for example, then you can always upgrade if you'd like.
Yeah. Thank you, Max. Well, look, I'm conscious that we've probably used our time. I'm going to hand back to Greg, but I would like to say a big thank you to Florence and to Max for their time. And we'll take any questions that you may have, Greg.
Thank you, Florence, Maximilian and Duncan. I've got a couple of external questions. I'll take both together. This is from Greenbank, because they relate. How do you positively screen your investment? How do you advise that? And have Lombard Odier been pushed to go against the long-term investment strategy by green clients to look at oil and defence in those two high-performance areas, even though they are sin stocks, I guess, from an ESG point of view?
Great question.
How do you navigate that?
I'm going to ask Florence to handle that one. It's obviously questions that have come up before. Florence.
We are developing in-house tools in order to analyze the green side of our investment. We have a very dedicated research team of 25 people. We have also built partnerships with big names such as Oxford University that you know well, and also Systemic, which is an advisor specialized into environmental, because these challenges that we're looking at are financials, but are scientific at the base, and this is not our first knowledge. So we are getting advice and stress testing our models with Oxford and Systemic that allows us to give a very strong scientific base to our tools that are then used into financial evaluation, knowing that this is coming above the traditional financial analysis, of course.
Well, far be it for me to suggest it, but I am actually going to suggest it. I don't know if you heard the interview with Tumelo and their ability to shine the light on ethical investments and all forms of shareholder investment. There may be a conversation to be had there. Who knows? I want to come to.
I'm fascinated by that debate, actually. So thank you.
Good. Part of EntreConf, its rationale is partnerships and introduction to relationships. Who knows what might happen? I've got a couple of closing questions because we are through our time for you, Duncan. In much the same vein, both of them. Your research last time at EntreConf indicated a paradox. As Eliot had it, between the idea and the reality falls the shadow. There was clear awareness by entrepreneurs of the need and opportunity for greater sustainability, yet a reticence to invest in it. Is that shadow lifting? And then
Look,
another one in parallel, which is from a philanthropy point of view, the UK has tended to lag the US in terms of the philanthropic funding by entrepreneurs. Is that changing also? Over to you on both, just briefly.
I'll take the first one, and I'm going to pass over to Max, who has actually spent a lot of time in the States and knows that mindset well. So the first point, I think, is an absolutely critical one, because the simple truth here is that there is a unspoken belief that to invest sustainably means giving up performance. And I think if that complete myth cannot be dispelled, then people are always going to be reticent. And I would say with strong confidence that we believe that investing sustainably is likely to be the biggest investment revolution of our lifetime. And businesses that are well run for the long term with sustainable values at their core will make more money than those that aren't. There's an ostriches and eagle approach here. The older companies are the ostriches and the new sustainable businesses are the eagles. And trust me, they will soar. Give them time, but they will. Max, on the second part about the difference in attitude between the US and Europe.
So look, I mean,
if it's changing.
The point is, I think it's at the end of the day quite straightforward. And it's interesting that you're making that point, because here on the continent, we always look at the UK as being, in a sense, more advanced than the rest of Europe. So it's all relative, I guess. But I would say the following. I mean, when we look at the data, we increasingly see that people of wealth are philanthropically active earlier in their lifetimes. The fundamental challenge that you have as an entrepreneur is time, obviously. And that is why it's really important to think through, can I start with a smaller scale philanthropic activity that I can then grow over time, where I can delegate some functions so I can focus on what I'm passionate about, or not. And what you see is both in the US and the UK, and it's true in the US, you have a lot of reporting on this billionaire philanthropy, which is extremely visible. Maybe a bit less so in the UK, but I would say you see, similar in a sense to what Duncan was saying, you see a secular revolution where everyone at all levels is getting involved earlier. And this is one of the reasons why, to come back to the donor advised fund, these entry-level philanthropic vehicles that enable people to get started are becoming more and more popular. And I think given that in the UK in particular, you have this issue where, the independent charities are being, a lot more subject to regulation than a couple of years ago. On the other hand, the donor advised funds model is taking off. This will tilt the trend to get started toward the donor advised fund even further. So I would not be that pessimistic. I've lived 5 years in the US. It's a great country. The UK is a great country as well. I would just simply say there is a secular trend where people of wealth, entrepreneurs included, are becoming active philanthropically early in their lifetime, which is fantastic. It's a real impact revolution. At the same time, it's our job as advisors to make it easy and convenient. And I think the good news is this is happening.
Very good. Talk of secular revolutions and such makes me realise that we're on the cusp of something quite profoundly changing, and the advice you've given today on both sides of philanthropy and sustainability has, I'm sure, been well found by those listening. And I suspect also your own status as a B Corp company adds luster, context to the offering that you have. So on behalf of everyone today, if I could thank Duncan, Florence and Max of Lombard Odier for high-level, thoughtful advice and insights. Thank you very much indeed. Thank you.
Thank you.
Thank you.
Thank you very much. A pleasure.
Great.